Hello.
Thank you. Thank you for being so patient. Some of you who have been here for a while, thank you. So I am Miata Idoga, and I am, thank you, I am the financial wellness, the National Financial Wellness Consultant for the Actors Fund. It is amazing to me to see so many fellow actors, artists, entertainment professionals in this room. I think it's really clear what an important topic this is to everybody. And so I really want to take a minute to thank the two organizations that have put this on for our community. Obviously, SAG-AFTRA, as our union, they do so much to fight to protect us, to increase our employment opportunities, right? Wages, our pension, insurance. And they also make sure that as much as possible, we get the information we need to be as powerful as possible as artists. And obviously, they make this incredible room available as well. So can we thank SAG-AFTRA? Thank you. And also the Actors Fund. The Actors Fund, just so I get a sense, how many people here are totally new to the Actors Fund? Okay, so a few of you, but many of you are familiar, and that's wonderful. The Actors Fund is an organization that is here to really foster stability and resilience for members of the entertainment community. To me, guys, that is absolutely huge, that there is an organization that is actually dedicated to fostering our stability and resiliency. And they do that in a lot of ways. They do that with emergency financial assistance, with housing, with insurance information, with sideline career support, and obviously with the financial wellness program, which is particularly near and dear to my heart. But so if you're not currently taking advantage of the programming offered by the Actors Fund, I mean, obviously you are in a way because you're here tonight, but I encourage you to really do so. So let's also thank the Actors Fund. So I am super excited to introduce my partner in crime this evening. This is Emily Churchill. Emily, yes, say hi to Emily. So Emily is also an actor and has been a working actor for many years. But in addition to being a working actor, she is an enrolled agent, and we're going to talk to you a little bit about what being an enrolled agent means. Emily has been preparing taxes for actors and entertainment professionals for 10 tax seasons. So at this point, she knows her stuff, right? So what we are going to do today is I really want to lay the groundwork for what is going to happen during this seminar, but also for what isn't going to happen during this seminar, right? Because we have 2 hours, which means that there's a lot that we have to do. But it's important to recognize, and I think all of you do recognize it because you're here, right? That you, and only you, are the leader of your financial team. Does that make sense? Right? There is not a single person who cares more about your money than you do. And sometimes what we do is we make the mistake of handing all our financial power over to other people, to experts, right? And that is truly a mistake. And so what our goal today is it's to get you information around, first of all, just taxes in general, but also what the changes are that we all have to be aware of with the Tax Reform Act that now has gone into effect with 2018. But our goal, Emily and I, what our job is today is to make sure that you have the information to ask the questions you need to of your tax professional, okay? We cannot answer questions that are specific to your situation. So we're going to tell you what the basic rules are, but then you have to sit down with a tax professional or get the information that you need that's specific to you, right? Because everybody in here has a different financial picture, okay? I have to do the disclaimer, which is that this is an informational workshop, right? This is not legal advice, it's not tax advice. You should not take this information and act or not act on it without getting additional facts about your particular situation. Fair? Okay. We are not, as I emailed you, going to take any individual questions. However, many of you emailed in questions. I spent a really long time going through all of them, and I've done my best to incorporate the answers to your questions into this workshop. Fair? All right, let's get started. Everybody's good? Cool. So, Emily, first question. I feel like it's a game show. All right, hold on. I sat on the clicker. That's not good.
Uh-oh.
Okay.
Okay.
So first question.
Oh, yes.
Tax preparer versus enrolled agent versus CPA versus tax attorney, right? Because we've all heard all of these things, right?
Yeah.
So what's the difference?
Yeah.
And which one do I need?
Okay. So I always say, first and foremost, no matter what their credentials are, feel comfortable with what they're doing. That is the first and foremost, you guys, okay? Because no matter if they have an EA, CPA, or a tax attorney certification behind their name, if they're not doing stuff that you think is right for you, then you might want to look at something else, okay? So in California, we have to be at least CTEC certified, okay? So I started out, I have a marketing degree along with my theater degree. And so when I moved to LA, a coworker, Ernie Charles, came up to me at BJ's. I don't know if y'all know BJ's, the Pizookie, right? And he was like, would you want to do taxes? And I was like, maybe. And I love numbers for some odd reason. And so I went and took classes at H&R Block. They have a great education course. And I got my CTEC license. And then I realized that I couldn't really do everything I needed to do for my clients, especially represent them in front of the IRS. And so I took more classes at UCLA, and I passed 3 really hard tests to get my enrolled agent license. Now, an enrolled agent just studies tax law. Okay, CPA goes through a certification course and goes through college, and they're certified public accountant, right? So they, study accounting along with taxes and such. An EA just studies taxes, and then a tax attorney studies all of that plus other law and whatnot. So in the eyes of the IRS, an EA, a CPA, and a tax attorney, all 3 of them can represent you in front of the IRS. So I don't know if that helps you at all, but all 4 of them can do your taxes.
But
Yes.
So knowing, right, whether the person who is preparing your taxes could represent you in front of the IRS, it's a good thing to know, right?
Yeah.
Just that may or may not matter to you at this point based on how simple or complicated your tax situation is.
Yeah.
But that's a piece of information that I feel like you likely want to know, so that if you are audited and the person who has prepared your taxes is not at least an enrolled agent, right?
Yeah.
Then you would either represent yourself or you would go find someone who was one of those things to represent you.
Right.
Great. Okay, cool. So there are a lot of tax terms, right, that get thrown around a lot, that I feel like many of us don't really know what they mean. And so my goal, our goal tonight, is to try to make what feels complicated simple, okay? None of us have to become tax experts, not at all, right? But we do want to have a basic understanding of what the paperwork is that we're filling out, of how we're earning, all of those things. So before, and trust me guys, we're gonna talk about everything that's changed. But before we do that, let's make sure we're all on the same page in terms of some basic vocabulary that we should all have, right? So Emily, the standard deduction, right?
Yes.
What is that?
Well, it's what we all get on the tax return if you don't itemize your deductions. And you still get it in 2018, but it's been doubled. We'll get to that later.
Okay, so basically, every single person who files taxes gets a standard deduction.
Yes.
Right? Yes. So just to put it in clean language, if I earn $60,000, the standard deduction for me was like $6,000.
Are you single?
I'm single, let's say.
Okay.
I'm not.
So,
But
I mean, filing single, that was an awkward question.
Right.
Filing single, yes. Sorry.
Yes. So if I earn $60,000 and I'm filing single,
Yep.
I used to get to automatically deduct $6,000 and change.
$6,350.
Okay. And now, as a single person, I automatically get to deduct $12,000. So
That's
my
double.
$60,000 becomes $48,000 worth of taxable income. That's what the standard deduction is. Okay. Now, as opposed to that, we had employee business expenses,
Yes.
right? And so what are those?
So that would be expenses that you would take against your W-2 income. Not 1099 income, just W-2 income. And it was unreimbursed business expenses, right? So if you do, have travel expenses from GEP talent, right? You cannot take those expenses if you actually got reimbursed for it. But if you didn't, then you can take the expense, and that's where that goes.
Okay. So the employee business expenses, right? My option always was, and because it's important to know what was so that then we can talk about what currently is so. So what was so is that I either took the standard deduction or I itemized my expenses, which means, right, that I went through and I said, okay, all of these expenses that I have, and we'll talk about what those are allowed to be, but all of these expenses that I have that were related to the pursuit of my work, right, I could add those all up. And if those added up to more than the standard deduction, which last year was 6,000 and change.
350, yeah.
Thank you. She keeps getting, I'm like, and change. 6,350. If they added up to more than that, then I would do that instead, right?
Correct, but I just want to make sure, itemized deductions, your business expenses are just a small portion of it, because you also have property taxes, charity, mortgage interest, and medical expenses within those itemized deductions. Right.
Okay.
So it's not just your business expenses and itemized deductions, but those business expenses are within all of those deductions. And I'll show you, I have a slide for that.
For
Okay.
that as well.
Okay.
Okay, perfect.
Yeah.
So one of the things that you kept noting is you kept saying deductions against your W-2
Yes.
income.
Yes.
All right. So I want to make sure we've got this. There are two types of income, basically.
Yes.
Either W-2 income or 1099 income. Can you tell us the difference between the two?
Yes. So W-2 income is mostly, it'd be union work. It would be anything that you fill out a W-4 for, We all know the W-4. You probably text someone and be like, what do I put down? Do I put down a 1 or a 4 or what? Right? Because I get texts like that when people are on set, right? So that's a W-4. And if you fill out a W-4, you will get a W-2 at the end of the year. A W-9, that's going to have your social name and everything, and that means you'll get a 1099 at the end of the year. Also over here on the 1099 spectrum, we've got cash income, we've got PayPal, we've got Venmo, we've got all this other income that's non-taxed. So when I'm talking about 1099 income, I'm talking about non-taxed income. Okay? Yeah.
So I have a nifty little trick. It might not work for you, but it works for me. If I go to a job and I get handed a W-4, right, and that's what I'm filling out, the paperwork, and you look and it says W-4, I think divide it by 2. At the end of the year, I'm going to get a W-2, right? So if I fill out a W-4, I'm going to get a W-2. And if I fill out a W-4, I know that if I fill it out correctly, which we'll talk about, I know that they will take taxes out, okay? If I go to a job and they hand me a W-9, at the end of the year, I'm going to get a 1099, right? So that's just how I remember. W-4 gets me a W-2, a W-9 gets me a 1099. And if I'm filling out one of those W-9s, it means taxes are not being taken out, okay? Have I got that?
Yes.
Okay, perfect. So, and then can we talk briefly about that thing you said, claiming exemptions?
Yes.
Right? So that's when I text you and I say, Emily,
yes,
should I claim 9?
No. Don't do that. First off, can I just say, the reason we are doing stuff so elementary is because I have so many people come to me to do their taxes and they don't know these things. So if you think that this is, I know what this is, just listen, because I guarantee you will probably go home and get all your W-2s and your 1099s and be like, oh, this is what she was talking about. Now I get it, okay? That's why we're doing this, because even though you think you know, you might not know. Okay, cool. All right, claiming exemptions. Y'all, don't listen to your best friend or your mom that's on the set with her kid. Don't do it. They're not tax professionals, are they? No, they're not. You should only be putting down the exemptions that are on your returns, and that is it. Yeah, that's true. Welcome to the new world, honey. You should not be putting down 4 or 5. Legally, you should not. I know the reason you're doing it, so they don't take out as many taxes. I know you can look at me like, huh? Well, she must be wrong. I'm not wrong. I'm an EA. I've studied the IRS code. I'm enrolled with the IRS. I'm telling you the truth. And all the people that are telling you the other stuff is wrong. You're supposed to put down the number of exemptions that are on your return.
And so if I'm a single person, would that be 0?
It would be 0 the most. You can put down 1. If you want to put down 2 or 3, I know, honey, I can see your face. You can put down 2 or 3. You're not going to, I hope you don't go to jail. I'm not going to say they're going to come get you. But legally, you're only supposed to put down what's on your returns, okay? So 0, they take out the most. 1, they'll take out a little bit less. 9, they'll hardly take out any. And that's why people are like, put down 9, they'll take out hardly any. But then people come to me when they put down 9, and they'll have a big bill. And they'll be like, why do I owe so much? I'm like, well, you put down 9, hon. They hardly took out any tax.
Right.
That's why you owe. You listen to Sally over there. I told you not to do that.
And I'm particularly,
it's true.
Guys, this will become clearer as we keep going in terms of what's changing, what has changed. But claiming high is potentially something that you've gotten away with that could really, really sting you this year. okay?
Oh, yeah.
So, and someone said it's too late, and so what I would say is on all your jobs for the rest of the year, if you have been claiming high, claim 0, and really start thinking about trying to sock away some extra money from those checks. But we'll give you more information that should help you be able to calculate approximately how much money you should have paid the IRS, so you can look at how much you have paid the IRS and figure out, with a little bit of time to spare, whether you could have a shortfall, okay? Great. So let's look at a tax form, and no one runs screaming. All right, I understand that you can't really read this.
I'm so sorry, you guys. I'm technically challenged. I'm gonna be honest.
But you did well.
I think I did okay.
Yeah, you can't make it that much bigger, but what we want you to understand here is basically what goes where on the form, okay? Yeah. So don't worry about all the little lines.
No.
Okay.
No.
So the 1040 is the tax form that we all fill out,
Yes.
right?
Yes.
And so on the first page of the tax form, you are going to put what?
Oh, can I make a disclaimer? I told you.
Yeah.
The reason. Oh, duh. She's getting it. She's got it. The reason we're using 2017 is because 2018 is still in the works. That's right. If you look up on the IRS, it'll say this is just a draft. And it is literally this big. I'm not kidding. This is now this. Yes, take a deep breath. I'm taking a deep breath. We're going to be fine. So it would be more confusing for you to see 18 than it is to see 17. So what I'm doing is showing you 17. Even though this looks confusing, it's going to be less, I promise. And then I'm going to show you what's going away and what's changing, okay? Oh, we're going to be fine. We got this. Okay.
Okay. So on page 1, my earnings, my W-2 earnings, go up on page 1, right?
Line 7.
Okay. Then there's another line that's my 1099 earnings.
Yeah.
Right?
Yeah. Net.
Okay, so tell us net
Yes.
versus gross.
Yes, and I have another slide to show you that. But on line 12, that's going to be your net of 1099, cash, Lyft, remember all that stuff I was telling you? We got gross, all your expenses, and then the net. That net is what's going to go right on line 12.
Okay.
Okay.
So page 1, the most important thing I think for all of us to know about page 1 is where our total income is going to go. Our W-2 income, our 1099 income, and now we're all clear on the differences between those two types of income.
Yeah.
Okay.
Yeah.
Over on page 2
Yeah.
is where I used to, but I got to put the total of my W-2 expenses, right?
Yeah.
Okay, so that was page 2. And then my self-employment tax,
Yes.
which is based on my 1099 income.
Yes, so it's based, I'm sure you've heard, oh, that 1099, you'll get double taxed. Heard that? Yeah, the double tax. Okay. So that is line 57. So what that is, so you know when you have your W-2 and you say, oh, I got taxes taken out. Well, you definitely have Social Security and Medicare taken out because that's automatically taken out. Doesn't necessarily you had enough federal and state withheld until you check, in which I got another slide, and we'll go through that. Okay. But on 1099, nothing is taken out. So the self-employment tax is Social Security and Medicare on the net of your 1099, okay?
Okay.
And so that's what 57 is. So that's the self-employment tax. It's not a double tax, really, if you think about it. Just think about it, well, I'm paying into my Social Security and Medicare. It's going to be there. The net, yes.
The net. Okay.
Just the net.
So
Yep.
page 1 is where we're putting all our income.
Yep.
Page 2 is where we have to put we were putting our W-2 expenses, and it's also where we put the taxes that you're going to have to pay on any of that 1099 income.
Yeah, and all the other taxes. Yeah.
And all the other taxes.
Yeah,
Okay, great.
all the fun stuff.
So now what we're looking at now
Ooh, yeah.
is this is the form on the left side, Schedule A, right?
Yep.
That's the form where I used to put down all of those expenses that I get to itemize, right?
Yes.
So flipping back again, guys, not to make you dizzy, but flipping back over here on page 2, they asked me just for a number, right? They wanted the number that was the total of my W-2 expenses. And so then the IRS, logically, right? The IRS says, how did he or she come up with that number? And so, so they give you a form where you would detail how you came up with that number, okay?
Yep.
So, Emily, this is
Yep.
where you were talking about how there's more than just the business expenses. So can you take us through what all the things were that, at least in 2017,
Yes.
I used to be able to detail on this form?
Yes, and I have this figured out for 18, so don't worry. So we got medical expenses, and for 17, that was capped. You had to at least hit 10% of your AGI.
Of your AGI, she used an initial.
AGI, what does AGI mean? Yeah.
Adjusted gross income. Good
okay.
job. Okay.
Then we've got taxes paid. That'd be your income taxes, your DMV, your real estate taxes. And then we've got mortgage interest, mortgage premiums, that fun stuff. And then we've got charity, both your charity goods and your charity cash that you give. And then we've got in that lower box, we've got unreimbursed business employee expenses. And that's what I was telling you about, okay? Adding all of that up. And there's a little calculation there. You don't really care. It's something that we care about. But the bottom number, I think it's line 29, will flow to line 40 up there. So all of those numbers flow to line 40. Okay. I'll know what to look for. Don't worry. You don't worry about it. You just give me what I need to know, and I'll put it on the form.
Okay.
Okay? Yeah.
So this was all of what I was allowed to do.
Yes.
Right?
Yes.
Now, so
Yes.
so we over here, right? We just dealt with the deductions, and always you stop me if I'm saying it wrong, right?
Oh, you got it, girl.
So over here,
Yeah.
we had the deductions that I was allowed to take against my W-2 income, right? But we have another kind of income, some of us, which is 1099, awesome. So now we got to deal with that, right? Because we have to have, do I have any expenses against that 1099 income? So this form, now we all really know more than we ever did, right? This form, Schedule A, is what I filled out with all of these kinds of expenses.
Schedule C for 1099, but Schedule A
this
for
one,
W-2.
Schedule A was for my W-2.
Yeah.
And now I got to go deal with the 1099 income. Here is Schedule C,
Schedule
right?
C, yeah.
Yep. So Schedule A was for your W-2 income, right? Schedule C is for your 1099 income, right?
Yes, it is. yeah.
Okay, great. So your 1099 on this Schedule C form, you would write the total of all the money that you got paid, right? But then you get to write all of your business expenses related to your 1099 income, right? And then that's how you get the net, which, again, on page 2, you have to record the net.
Page 1.
Page 1. Sorry, yes. Thank you. You see?
She was on it.
She was on it. On page 1, you got to report the net. Okay?
Yeah.
So everybody following?
Yeah. Nope, that's on your A. Bank interest. You can take mortgage interest. If it's bank interest for your business, then it doesn't go on your return. It's either mortgage interest or bank interest for your business, If it's bank interest for your business, I'm asking you, is it a bank interest for your business? Oh, interest income, that's going to go on your front page of your 1040. That's just income. That's on a we're not even talking about that. No, 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 no. That's a 1098 INT, not a 1099.
Okay.
Sorry, I thought we were on expenses. I thought you were talking expenses because there is business interest expense. That's what I thought you were talking about.
And so it's kind of lousy, right? 1098, 1099, no, all of that stuff. But you have to be careful and look at actually what is on the form. So we're talking about 1099 income.
Not
Okay.
1098.
So this was all of what I could do. So everybody's clear now on the way it's always been, or as long as we all know, right? So now let's look at.
Well, hold on.
Okay.
So I do want to point out a few things. If you can have more than one Schedule C, right? Especially a lot of us. Some of us are Lyft drivers, actors, and teachers, right? So that would be possibly 3 Schedule Cs. And you need to keep 3 different business flows. I prefer my clients to have 3 different business, expense sheets for each because we're going to have 3 different Schedule Cs, right? Okay. So just make sure that you are keeping each flow of income, especially with 1099 income, especially for the new year. Make sure you keep all income and expenses separate, okay? That's why it's really important to keep bookkeeping up to speed, keep your receipts together and all that stuff.
And we're going to talk a lot about record keeping, but just so I can see, how many managing cash flow graduates do we have in the room? Right? Okay. So all of these guys who just raised their hands, right, they have learned how to keep their records so that everything is separate. And these are the kinds of things that when I say at the beginning that you are the leader of your financial team, these are the things that you want to make sure you start putting into place so that when you file your taxes, you're as ready as possible,
yeah.
Okay?
Yeah.
But thank you for that because I wasn't clear that each different kind of 1099 income gets a different Schedule C. Yeah. Okay, so everybody got that. Okay. So Emily, let's talk about what has changed. Okay. Now, I think what's best is you can take us through some of this stuff, and then guys, the ones that are the most relevant to our community, we've got more slides and we'll go more into detail on. Cool?
Yes. Okay, so let me see. What would be easiest for you all? Actually, can we go back?
Yep.
So all of this stuff, if you took a picture, it's cool. I've got another slide that is even bigger that will show you all of those things.
Which one?
Go back further. Okay. So a few of the things, this is great. So a few of the things on my highlight sheet I'm going to show you because we already talked through this, okay? All right, so let's go down the Schedule A. First off, because remember I told you the new form is like this, right? They're possibly calling a Schedule C Form 1 now. And it's not final, so we don't know. I do believe all Schedule C, Schedule E, that's rental, if y'all have rentals or whatnot, all of those things really haven't changed that I've seen. The thing that has changed, I believe, could be the name of it. And where it goes on the return. But you can still, with Schedule E2, take the rents, take the expenses against it, just like you have been, and come out with the net, which if you have rental, you understand what I'm saying. Okay, so what is happening in 2018? Lots of fun stuff. Okay, Schedule A, you can still take medical expenses. I do believe there is a cap. I'm not sure on the percentage. It was at 10%. I haven't seen it change, so it might still be at 10% of your AGI, adjusted gross income. Taxes paid. This is the big thing. I'm sure you all heard at the end of the year, everyone was like, we got to pay our property taxes before the end of the year. Do you remember that? Do you remember everyone why were they saying that? Do you guys know? I'll tell you. So 2018, fun for us in California. Taxes paid, that line is capped at 10,000. Capped at 10,000. That is why everyone was hurrying to pay their property taxes before December 31st, because if you own a house in California, you know you pay more than 10,000 with your property taxes plus your income taxes that you pay to California, right?
Right.
And that's why. That's why there has been articles written about New York and California are screwed. Oh God, sorry. Oh my gosh, if I cuss or something, I'm real sorry. But that is why, because we are high tax states, right? So we pay a lot of taxes, and with that tax capped at 10,000, our state, we're going to see that, okay? So that's why there was that whole thing at the end of December. Okay.
So wait,
yeah.
So it's capped at 10. Am I allowed 10 for my property taxes and 10 for
no,
my
honey.
state? No,
You are 10 done.
10 and done.
That's why everyone was freaking out.
Okay. So
Yeah, I know. That's why we're like, oh no.
So if you own a home,
Yeah.
it's very possible that you exceed that 10,000, but now no matter what, you're just getting the 10. Okay?
And that's one of the hard ones.
Okay.
That's one of the hard ones to swallow. Mortgage interest. Now this one, I don't know if you guys are going to even understand it because it's even hard for me to understand it. You are able to take mortgage interest. If you noticed on your mortgage interest statement, especially for 17, there is a new box that says the debt that you have. You are able to take up to the mortgage interest on $750,000.
Right. So
Okay.
this is an easy one, I think, to know if this affects you. If you owe more than $750,000 still on your home, then this will affect you.
Yeah.
If
Which
you own a home
lot of people do in
and
California.
you owe less than $750,000, you're still going to be okay. The biggest difference I saw, which may affect people here, is that you used to be able to, correct me if I'm wrong, I used to be able to deduct the interest I paid on a home equity loan.
Oh, yeah, you
as
can't.
well as my mortgage. Now I cannot.
See you later.
So only...
I know.
So, yeah, so only
No.
my mortgage. So any of the interest, like some of us might have home equity lines of credit where we've only been paying interest on that loan, and then we've been able to deduct all of that interest, that is gone. So you will only be able to deduct the interest on your primary
Yeah.
mortgage, okay?
This
So
is-
we can't,
yeah,
no,
we
I'm
can't
sorry,
do
we can't
specific
take
stuff,
questions. We're
y'all.
not going to do specifics, okay?
Can't do specific questions.
Yeah. The interest on it
Interest,
is
yeah.
deductible. Yes. Okay.
Okay, so that's the mortgage
That's
interest.
the mortgage. What about charity?
Charity, we're okay. Okay, we're good on charity.
So
Yeah.
anything I give away, or any amount I donate, or the value of the goods I donate, I still get to.
We're still
write
able
that
to do it. Now, there is a cap. It's a pretty high cap. I think you have to.
Like 60% of my income.
Yes,
If
it is
I-
a very high cap that you have to make if you're making 350,000 or so. You know, you can come talk to me. We can't take questions.
Okay.
But that you can still take charity. So you're okay on that. There's no specifics, right? Like taxes, I know right down to the number. Mortgage, we got down to the number. Charity, I know you can still take. Unreimbursed business employee expenses, gone.
We're gone.
They're gone. They're just gone. This is why everyone's freaking out. This is why everyone, I gotta incorporate. You gotta incorporate, right? That's why. Because that's gone.
So, guys, that's the one that obviously feels, and in many cases is, the most painful
Yeah.
for our community, all right? And what we're going to do is we're going to talk more
We're going
about
to talk
that.
more about it. We're going
all
to
right?
talk. Oh, yeah, I got more to go. Sorry.
But, but it's just understanding that at this point in time,
Yeah.
all of us who have been earning as actors or whatever other entertainment industry profession, all of us who have been earning all or most of our income from W-2s, which basically, since I think most of the people in this room are SAG-AFTRA actors, that's most of us. We're earning most of our money on W-2s, right? When I go and I am booked by one of the studios, that is a W-2. So all the deductions that we were legally able to take have been taken away. All of those business-related deductions.
And that does include agent commissions.
And manager commissions. Yes, it
And
does.
and I have 3 nationals running right now. So I understand more than you think. But this is the name of the game right now, right? We are all having to work through this and see what happens. We will get into all of this a little bit later, so just hold on. But just know, I know what you're feeling, okay? I feel like a lot of actors are like, but no, I got all this. I get it, y'all. I've been a SAG member since '05. I get it. Okay, now, see 40 up there? Now, you know how we had $6,350 for the standard
Deduction.
standard deduction. It is now $12,000, right? For single, $24,000 for married filing joint. Okay? So, if you do have itemized deductions, so if you do have property taxes, if you do have mortgage interest, even with the caps, and it is more than the $24,000 or it is more than the $12,000, you can still take itemized deductions. You just cannot add in those miscellaneous unreimbursed business expenses, okay? All right. Now you see the little, I don't know, boom that I did there? I wanted something fun. I don't know. That's the exemption. Everyone always got an exemption on their return. I think it was
4,000.
4,000 something. It wasn't straight 4,000, but it was like 4,900 and something. And change. Everyone always got that on your return. If you were married, you got 2 of them. If you had children, you got an exemption for each child, right? So if you're married and you have 3 kids, you have 5 exemptions on that return, okay? Exemptions are gone. They're gone. And that's why I put that little boom mark on there. I was like, they're gone. They're not there anymore, okay? Now, don't freak out about that either. It's okay.
I want to freak out. Emily.
I know.
I want to freak out. Okay.
You guys, we're going to be okay. You know, I'm in my head, I'm with my husband. I have him bring home his pay stub every 2 weeks. I'm like, give me it, let me see it. I got to do the numbers. I do every week or every 2 weeks. We're in this together, right? Don't think you're the only one that is in this situation. We're all kind of nervous about what's going to happen. We're all needing to see what's going to happen. I still don't know what a 2018 return is going to look like, right? Because they still are in draft form. So let's just take a deep breath. We're doing our best. Keep in your expenses, because there's, like I said, they're still in draft form, so they're still going through stuff too. Okay, let's go to the next
good.
one.
So what I wanted to, here
we
laid
go.
it out. She laid it out here
yeah.
really cleanly.
Take a picture of this.
Okay.
This is a good one.
So
it's a fun one.
These are some of the clear things that have also changed and or gone away, right?
Bicycle commuting reimbursement. Who's taking that one?
I know. So if you ever took that one, you can't do that anymore.
Can't do that.
The deduction for moving expenses, again, I feel like hits our community pretty hard, because we do move between New York and LA and Atlanta and Chicago. That is now no longer available as a deduction unless you are active duty armed forces, okay? And you can see the other ones. Alimony payments, if anyone is making alimony payments, those used to be deductible and they no longer are. Okay? So that's important to know. Sorry, guys, I'm really going to ask that you wait because we cannot take questions. Okay, the standard deduction you see has changed from it was for a married filing jointly, it was $12,700. Now it's $24,000. For a single person, it was $6,350, and now it's $12,000, right?
Yeah.
And the maximum individual tax rate, and we're going to look at all the tax brackets so you can start to figure out where you fall, but the maximum tax rate has gone from 39.6 to 37%. Okay? So these are all the things that have, or at least a lot of the things that have changed.
Okay. Before we move on, I do have something cool. I do. There is a light, you guys. On all 1099 S corps or partnerships, these are pass-through entities. There is a 20% business deduction. So what that means, please don't quote me on it. So what this means is, on the Schedule C, so say like we got 10,000, 5,000 expenses, so our net is 5,000. 20% of that is not going to be taxed. So if that 5,000 is on your K1 as an S corp or your K1 as your partnership, 20% of it isn't going to be taxed. So you know how the whole rumor is, corporations are getting the easy way out. This is why. Because pass-through entities are getting a 20%, tax-free on 20%, the first 20%. The C Corp is from 35% down to 21%, okay? So this is why you're hearing corporations are getting the good deal out of the tax rates. Does this make sense? Okay. Pass-through entity, well, if you don't have them, you won't know, but if you have an S Corp, if you're part of a partnership, or if you have a Schedule C, and that Schedule C member is the 1099 cash income. Okay, so if you have any one of the three, it's considered a pass-through entity. Well, the S Corp and the partnership are pass-through entities. The C Corp is a business. You're going to get a 20% business deduction. So 20% business deduction right off the bat.
Yes. So, but just to be clear, the only people, and we're going to talk about the fact that should I think about becoming one of these people, right? But the only people that what Emily just shared affects are people who are incorporated, they have an S corp, right? Or people who have 1099 income.
Or a partnership.
Okay? So some of you may have some 1099 income, and so that would, that extra 20% deduction would help you. So the pattern we're starting to see is that businesses have been rewarded, right? And employees, kind of straightforward employees, are probably doing okay, right? But we fall in a very unusual group in that our unions fought for a really long time for lots of reasons to get us paid and recognized as employees, right? So that we could have unemployment, so that we could pay into our Social Security, so that we would be insured, right? All of those are the reasons why our unions fought to get us treated as employees. But until now, you have been able to recognize the fact that you're an employee who has a lot of expenses, right? does everybody know someone who is an employee? They have a regular job, right? They don't spend money for that job, right? If they spend money for the job gives it back. Imagine that, right? Isn't that crazy? The job gives it back. So what's happened with this new tax law is that basically it has ignored, penalized, slammed, punished, right? A percentage of the population that we happen to be. But let's keep going, and we'll talk about some of the things we might be able to do and some of the things that we might not be able to do. Sound good?
Yeah.
Okay, so Emily gave us these two examples of
A pay stub. Pay stub.
right?
Yeah.
And there are a few things that I noted about this, and I would love to hear what you want us to really draw from this, right?
Yes.
So first of all, guys, the top pay stub, right? You see this person is a pretty high earner, right? Their year-to-date gross is, and this was in August, so they had like a few months left of the year, right? But their year-to-date gross was $276,923.08.
We're aiming big, y'all.
Right? Okay.
Right.
So that's this top person. Now, what's interesting to look at and start to educate yourself about is if you add up the taxes that that person has paid so far, right? And you add up the taxes that they paid on this particular check, right? So everybody knows that on each check you get, it shows you the current, what are the taxes you're paying on that particular check. And if you're being paid by the same company or payroll company, it shows you year to date, right? And so what I found interesting is that if I added up the taxes that that person had paid, it ended up demonstrating that they are around the 37, they were paying in taxes around 37% in taxes.
Are you just doing total deductions?
I did all of their federal.
Oh, okay.
Taxes.
That's what I think we need to highlight.
Okay, so that would be would be the first
So
three.
the reason, can I take over?
Please.
So the reason that I have these W-2s up here, you guys, is because there's been several articles out now. I don't know if you look at your pay stubs, but you should. Because with the new tax act, the payroll companies have actually been taking out less taxes than they should. NPR did an article on it, and I think Forbes did another article on it. And before the articles came out, I was even seeing it in my pay stubs. And I always put 0. So I was like, whoa, what's going on? And so I've been keeping track of all my pay stubs, and I'm even going to owe quite a bit. And a lot of taxpayers who haven't owed in the past are actually going to owe quite a bit on their tax return, even though the tax rates have quote unquote lowered a bit. Not enough has been withheld on on your W-2s. Now, when you come to a taxpayer and you're like, "Oh, I had taxes withheld," that does not mean that you had enough federal and California tax withheld. It does not. Most of the time, you had enough Social Security and Medicare because that's automatic. Okay? So please look at those pay stubs, you guys. And when you look at your pay stub, I want you to look at year-to-date federal tax. Year-to-date federal tax. You take year-to-date federal tax divided by year-to-date gross wages. By doing that calculation, you will get the percentage that you are being withheld federally. Okay? Now, and we're going to show you the tax brackets. If you are in a 24% tax bracket and you are being withheld at 10%, that's under withheld quite a bit, right? Okay. You can call up the payroll company. You can call up Talent Partners. I have done it. Talent Partners does not take out taxes until you make at least $8,000. So don't be one of my clients that comes to me and is like, oh, I didn't know that. Well, you all know it now, right? I have had to tell Talent Partners to take out a certain amount from my paychecks every paycheck. Because I don't want to be one of those people that they don't take out till 8,000, right? You have to take responsibility, people. You have to. Okay, so we know how to do federal, right?
So wait,
okay.
one quick second, because so I did it wrong. So if in this case, what you would do is you would take 82,140.89,
Yep.
and you would divide that by 276,923.
Yeah.
And then you remember, guys, you get 0.29, and then remember in 5th grade you go zhoop, zhoop. Everybody remember that? You have to move it. And that shows that this person has been paying approximately 29.6% taxes, right? So if you do that math for yourself, and you know what tax bracket you fall in, which we're going to look at in a second,
we'll look at
then
it.
all of us right now could do the math. We could look at our next paychecks. We could do the math, and we could say, oh, wait a second. I'm in the 22% tax bracket, and I've only paid 15% in taxes so far. And then you calculate how much should I have paid. You subtract what you have paid, and you have right now October, November, December, January, February, March. You have 6 months to do what you need to do to catch up.
I would send it in by the end of December. I wouldn't wait till April.
Right?
Right.
But a few months to catch up. But you won't be caught by surprise, right? Which is what we're really trying to avoid.
And I also want you to, we're not taking questions. Okay. Yep. 82,140, and you can do 0.89 if you want. So it's a year-to-date federal tax, 82,140, divided by year-to-date gross wages, 276,923. Okay.
So year-to-date federal taxes divided by year-to-date gross income. That's what you all want to figure out.
And you should also do that with California. Okay, California income tax, because you have to pay them too. So you take year-to-date California state tax divided by the year-to-date gross wages. Now, California is going to be a lot lower, right? That's probably going to be, I don't know your tax situation, it's probably going to be between 4 and 6%, okay? But just make sure it's something, because there are some people that don't have any withheld, and you want to make sure you have something withheld. And please take the time to do this. I know we all get 20 different W-2s. It's your responsibility that you have enough withheld on all 20. And on all 20 of them, they don't know you're getting 20, right? Talent Partners doesn't know you're getting 3 other ones that equal 60,000.
And this is where, if you've been claiming 5 and 6 and 9, right, your number is likely to be way below the tax bracket.
This is where it's coming to you.
In.
This is where it's going to hurt.
And so Emily highlighted for us on the bottom check.
Oh, yeah.
Again.
And I didn't highlight it. It was done for me. Oh. I don't know how to highlight. But what's highlighted, I thank you for that, though.
Yeah.
What's highlighted, this is the actual current check, right? So what's highlighted is the current amount, and then year-to-date is the other amount. So when you're looking at your own check, when you're seeing too many numbers, that's what's actually going on, is you'll see the current amount, and then you'll see the year-to-date amount.
So I'm going to do it quickly, just in case any of you want to try and do it. So we would take the federal income tax, right? Mm-hmm. And we would divide that by the gross pay. Yes, so it's $314.03.
They're really under withheld.
Okay.
Yeah.
And their salary was $2,500.
No, so you want to take 314 year to date divided by 38,298.
Oh my gosh.
Yeah, so as you can see on this puppy, they didn't have any withheld until this paycheck. They're bad. I don't like them.
I didn't realize that was.
What? Oh, yeah. Oh, yeah.
Yeah, you're right.
Well, let's just not look at that one.
Yeah, but we can still do this current check.
Yeah.
Which, if the federal income tax on this current check is $314.03,
Yeah,
and
yeah.
we divide that by this current salary, which was $2,500,
Sure.
guys,
How much is that?
How much tax is that person paid for this check? What?
Okay.
12.5%. Okay. So depending on how much they earn throughout the whole year,
Yeah.
12%, they may be low.
They may be low.
They may be low, right? It depends on what tax bracket they're going to end up in for the year, right? And if that's closer, that amount, we don't know, but if their net pay year to date is that high, it's possible they're in a higher tax bracket, which
Yeah.
we'll look at in a second. Yeah, the 37,000.
Let's
yeah.
not look at the
But we
37.
won't really look at that.
Let's just
'cause,
look at the
yeah,
top
we're just gonna-
paycheck.
yeah, top paycheck.
It doesn't matter. You
Okay.
go look at year to date on your own pay stubs, year to date federal tax divided by year to date gross wages. I promise you, it'll give you the percentage you need. Okay, let's go to there we go.
Here are the tax brackets, all right? And this is where all of you should be able to get a sense, based on how much you expect to earn, of which tax bracket you are going to be in. Bow now, bow now. Okay, so you see what they were in 2017, right? The tax brackets. And now you see the rates, the tax rates and the new tax brackets, right? So everybody can look on here and get a sense of where you are, whether you're married, filing, whether you're
Single or married.
Or married.
And so when you do your calculations, like I told you, it's not going to be exact, right? Because this is not taking into consideration the standard deduction and if you have children and other credits, right? But it will give you a sense. So if you are in the 22% tax bracket and you're being withheld at 12%, you are under withheld, right? But if you are in the 22% tax bracket and you're being withheld at 18 or 19%, I'd say you're okay, right? You might owe a bit or you might get a bit back, but you're right in the ballpark. Okay. Does this make sense? Because, I mean, once you get past, 18 or 19, if you get to 17, then you're looking at maybe owing a bit, and then, further down. Just be smart about it, you guys. These are the tax brackets. Know how much and it is surprising. I did my own pay stubs, and I'm like, that's how much else I have to pay in. It's going to be a bit shocking this year. I'm going to be honest, because we think, oh, the tax bracket's lowered. I don't see it lowered that much, but just be prepared, okay?
So what I want us to do, and we'll just hang out on this slide for a little bit, because what I want us to do is I want us to take a little bit of time, and this is where I'm going to bring in some of the questions that you guys sent, to talk about what are our options, right, if any, okay? And I need to just say up front that don't get mad at Emily and I.
Oh, yeah, I didn't make these rules.
That for some of you, you may feel a little bit stuck between a rock and a hard place, right? But I want to talk a little bit about what are our options, okay? Now, the first thing I think it's important to note is that some of us have been sort of panicking unnecessarily, right? And so to me, what it's important that you go away with today are the tools to figure out whether this is going to affect you or not, right? And so the first thing, right, is that the standard deduction is now $12,000, right? And so some of us, we don't have itemized deductions above that amount.
Correct.
Right?
Yep.
So one of the things that I think you would want to look at is you would really want to look at your records and see in the past how much have you been deducting? Because it's possible that when it was $6,350, you were deducting more than that, right? But if for the last few years you've been deducting $9,000, $10,000, you're still fine, right? So you want to look at that. But I'm going to pose a question for you, Emily, and I don't know what answers you might have. And this is where, if you're taking notes, right, I just ran some figures, okay? I think we can, but go run and someone else will take notes for you, okay? Because we got to fit in a lot, yeah. So we got to fit in a lot.
Tight ship tonight.
Okay, yeah. Well, you have to wait because we might address it, right?
We're doing the questions now,
Yeah,
right? Or close
and
to
I'm
it.
doing the questions that people sent me first. So let's make sure that we don't get them answered. Okay. So let's say that I'm an actor who in 2017 earned $60,000 in W-2 earnings. Okay? So you guys can write this down if you want to. All right. But let's say I had an agent and I had a manager. Okay? So I would have paid that agent 10%, right? And so that's how much? $6,000, right? And let's assume that my manager is 15%. So I would have paid the manager $9,000, right? So that's $15,000 total right there in deductions that I would have had, right? Then I would have gotten that personal exemption. So I'm acting like I'm a single person who earned $60,000. So I would have gotten that personal exemption, which would have been $4,000. So now I've got $15,000 plus $4,000. I've got $19,000, right? And let's just say that that actor had an additional $10,000 worth of deductible expenses between their classes and their marketing, and maybe they had to get a stylist for a couple jobs, and they hired a publicist once because they had a gig, right? So I had an additional $10,000. So that person, if we added all that up, they ended up with only $31,000 in taxable income. Okay, so added up all those deductions, subtracted it from $60,000. That person ended up only being taxed on $31,000. So if we look at this, $31,000 in 2017 would have put them in which tax bracket? 15%. So this is rough. Everybody gets that this is rough, but that 15% would have equaled $4,650, okay? So I take that same person in 2018, $60,000 in W-2 earnings. They can no longer take any of those deductions, so they take the standard $12,000, right? So they now have $48,000 in taxable income, right? What tax bracket does that put them in 2018? 22, so that $48,000 would be taxed at the 22% rate, which means they would pay approximately $10,560. Okay? So that's rough, right? But that's an increase in $5,910 in taxes paid, right? So that sounds terrible. And that's the first thing, which I want to look to Emily and say anything, right, that we can do. But the first thing I want to say is The reason we're doing this is so you can figure out, is that you or close to you? Because it might not be for many, many people in this room. But I want you to do yours. How much you earned, how much you expect to earn, now what you know, how many deductions were you able to take, right? Our CPA, I was talking to Emily, our CPA, he just ran our taxes for 2017 through a 2018 model, so your person may be able to do this, and he was able to tell us, you're okay, right? You're gonna actually come out ahead by a couple $100, right? If the same thing happens next year. But so I share this because if that's you, this 60,000 example, if you discover that, then what?
So I need to preface this is W-2 income.
Right.
Not
W-2.
1099.
Right.
Okay. Please note that. My clients also get the printout of 2018, so you get a little look at what 2018 will be if the numbers were the same. Like I said, we're kind of all SOL if that is the case. I'm in the same boat. I am not rushing to incorporate because I want to see what a 2018 return will look like. Because corporations are very expensive.
So let me ask you that, because that was a very common question.
And not for 60,000. If you're making
got.
60,000 and you incorporate for that, you will be
Right.
putting out a lot more money than you should be. Okay?
So Carlin, Hillary, Jen, and lots of other people sent in, when does it make sense to incorporate? Is that a question that it's possible to answer in any sort of general sense?
I'm going to give you my spiel because I get this question all the time. If you're not making 200,000 consistently, I wouldn't suggest it. I do corporate returns. I see what happens with corporate returns, okay? All your friends are telling you you got to incorporate. Are they tax professionals? Probably not, right? Yeah, you can take off your expenses, but are they telling you how much it costs to incorporate? Are they telling you how much it costs to do a corporate return? Are they telling you how much it costs to do payroll for your corporation? Are they telling you how much it costs to do bookkeeping for your corporation? Unemployment with corporation? You can't do unemployment, I've heard. It's still up in the air.
That's huge, guys.
It's
that
huge.
Unemployment question, right, is your safety net, right? You have to consider that as well, right?
But if you're not making enough money, it is not worth it for you to incorporate. I'm telling you that. If you get on that series, that first season, not really necessary until you're hitting second season, y'all. Because if you do it and then it doesn't go, you still have a corporation, right? And California is going to make you pay at least $800 every year you have that corporation.
And don't I have to file a return for that corporation no matter what?
I already said those expenses, right?
But
so
even
you
if
still
I
have
don't
all
make
those
money,
expenses. I'm sorry?
Even if I don't make money, I still have to
Yes.
file a return
You
because I
still have
have
to
a
do
corporation.
returns. You still have $800. You still have payroll. You still have all that stuff no matter what you're making.
Right.
You can't easily dissolve a corporation. You have to pay to dissolve it.
Yes. It's not
It's not as easy as just
easily
flipping a
done,
switch, right?
It can be done, absolutely.
It can be
And there were a
done.
couple of people who asked, that question. And again, that's something that I feel like you need to really sit down with your accountant, your tax preparer, and talk
Yeah.
about
Everybody's
whether
situation is different.
the
so,
trends.
if you're ready, cool. But run through it with a professional. Don't just do it. Don't just go to LegalZoom and do it, guys.
Right.
Don't go to LegalZoom and form an LLC, and then you go to a tax preparer and be like, oh, I got an LLC.
Right.
What?
So,
That's $800 a month or a year right there, just
Right.
an LLC, okay?
and the LLC, well,
I said 200,000 a
she
year
said 200,000.
consistently.
Okay. Now, what I'm going to tell you is that there are CPAs who will say 100. There are CPAs
yeah.
who will say 75.
People will tell you
There are-
less.
Right.
People will tell
and
you
so, again, it is super important to evaluate how you earn and how you spend. And your situation, whether you have a spouse, and all of those things would come into play. What safety nets exist for you if the corporation isn't making money? The other thing that is super important is we all assume just because I have a corporation and now I go and I tell whoever hired me, I want you to pay the corporation, they can say no, right? So as a studio, if you're a star or you've been a series regular on my show for a lot of years, sure, I'm paying your corporation.
Not necessarily.
Oh, right. I'm sorry.
They
right?
can say no,
Maybe.
you guys, and issue you a W-2.
Right.
And if they issue you a W-2, that does not go through your corporation.
Right.
Please make sure that the people that are giving you the big bucks can issue you that 1099.
Actually pay your corporation.
Because there's no reason to have a corporation if they're not going to give you a 1099, right? I had a client who makes $300,000, and the people that are giving him the $300,000, he was asking me to incorporate. I was like, we'll see if, let's see what our options are. They won't issue him a 1099. I was like, well, there's no reason for you to incorporate, hon, because that's where your money is, right? If they're not going to give you that 1099, there's no reason for you to incorporate, okay?
And am I right? An LLC has zero tax benefit.
Not really, because an LLC is a disregarded entity. Single member, that's just one person. Single member LLC is a disregarded entity in the eyes of the IRS. IRS doesn't see it. Doesn't see it, y'all. No, they don't. It is a state entity. It is just a state entity. It goes on your Schedule C on the IRS side, right, on your personal return. And then you have to do an LLC California return, $800.
So you have to
not
pay
really.
$800 no matter what, and you don't, and I'm hearing things out there, actors go out and form an LLC, right? That's not a good idea at all, right? Let me see a couple other questions that came in. So Vicky said, which I thought was really interesting, she said she noticed that actress Tiffany Haddish mentioned that the IRS takes so much in taxes out of her paychecks. She said that on an Instagram video, apparently. And so Vicky said, I was thinking maybe she's not even incorporated, right? And so I loved that Vicky shared that, because I think, don't assume that every actor out there who you think is making the big bucks is incorporated, and definitely question whether that's something that makes sense to you.
Yeah.
Right?
Oh, yeah.
Now, if I'm incorporated in New York, right, because some of us go back and forth, so I'm incorporated in New York, and then I end up doing a ton of work here. Do I have to do something with my corporation? Do I have to change it?
Yes, you owe California taxes if you have California sourced income. You do. And if you think, I'm going to file my New York return and not do a California return, they probably will find you. And it'll probably be a couple years late, and then you're going to have interest and penalties on the balance due.
Right.
Okay? So you'll probably have to file a 592B, which is a non-resident withholding if you are a New York resident and you're doing acting in California. Because I have a Delaware corporation and they do work in California. I file a California non-resident corporation and I file a Delaware. We do California taxes and we pay it.
Right?
Yep.
And so another rumor that I hear out there is, California has that $800 penalty, so I'm going to form a Delaware corporation. Don't do it. Okay? You work in California. You are earning in California, and you will get caught.
Oh, and Delaware's now like $250, y'all.
Yeah.
It's not free anymore. I don't know why people keep doing it. I think in the 90s or something it was free, but now Delaware's caught on. They are charging you, so FYI.
So I don't know if you can answer this one. I didn't quite understand it, but it seemed like a good question. Isn't that funny? Okay, so should we, as a union or other collection of artists, push for a higher limit for the qualified performing artist provision of the tax code. So I don't know what the qualified performing artist
You
provision
probably don't.
is.
And I don't even know if we have it anymore, to be honest, with 2018.
Okay.
So 2017, the return I had up there, the QPA is what we call it. I think the threshold was 16,000. Yeah, so you had to make less than 16,000 to do it, right? But if you did your return on TurboTax, they probably put your expenses there, and if you ever got audited, they would be taken out because they don't go there. That's why you should pay to get your return done. Anywho, QPAs, those are qualified performing artist expenses, okay? I believe that went into effect probably in the 50s or 60s, and they haven't updated the bill, obviously. And that is for expenses for qualified performing artists, which we are, but you have to have at least 2 W-2s over $200, and you have to have less than don't quote me on the number, but I think it's less than $16,000 of total income. So most people don't hit it. Right, but that's the only way you can take it, and yes, it should be upped. What part? Qualified performing artist. You have to have at least 2 W-2s of $200 or more each, and your total income, performing artist income, has to be at least 16,000, I believe, but it's between, I think it's 16,000 max.
Okay. So what I liked about that question that I didn't really understand, right, was that I do think that it is important to get educated and then get vocal about the way that this is affecting this community, right? I don't know whether anybody here is also in equity. I'm in equity, and they've really been encouraging us to write letters and really make it clear how this is impacting your family or yourself. If you are one of the people who truly gets stung by this, really get that down and share that, right? Because that's the way that we as a community, I do think, have to band together to try to say these new laws aren't recognizing who we are. And that's important, right, that happened. Now, the second part of this question, which I really liked, was, does it make sense for actors who earn only W-2 income to potentially start a second business, any 1099 business at all, in order to be able to deduct formally deductible expenses, or some of the formally deductible expenses?
I don't want to say yes to that. I don't think you should just start a business so you can take expenses. I don't think that's ethical. But if you are an entrepreneur and you do have, other pursuits, yes, definitely pursue them because 1099 Schedule C income is more advantageous now, as you can see, right? Because we can take expenses. 20%, you will get that 20% deduction for the net of it. So it is more advantageous to have 1099 work now than it ever has been before, right? Does that help answer the question?
Absolutely.
Okay.
And, I'll put in my 2 cents. People who take my classes know, I definitely do come down pretty strongly on the side that if you are remotely entrepreneurial, which I think that most of us as actors already are entrepreneurial, but I think you should, I think it's worth at least considering, is there a business that it makes sense for you to start? So I totally agree with Emily. I'm not saying all of us should run out and start businesses that we have no interest in whatsoever, right? But for instance, let's say that you're already someone who does some coaching, right? Or you have a tutoring company, or you tutor, right? Or any of these ways that you may already be bringing in income, I definitely think, just in terms of being a strong financial being, as strong a financial being as possible, that it's worth really looking at how you can build that business, build that income, right? Because additional income helps us all, right? But suddenly, my office supplies that are now gone, I could deduct against that business. If I need a website, and my website has pictures of me on it to show you who your child's math tutor is going to be, well, the headshots that I use for my acting business might also be the same headshots that I use on my website. Okay? So please, again, hear me, guys. I'm not suggesting you go run out and start a business if you're not interested in it, because the business won't be successful and it'll end up costing you more money. But if you are already someone who is serious about creating multiple streams of income, this new tax law definitely benefits business owners. Okay? So, now, in the last portion of time that we have, right, what I want us to look at is, for those of us who can still deduct, which would be if I have any 1099 income, right? And one of the questions I got a lot, Emily, is they're like, well, we can't take these deductions anymore, so should I just stop keeping records? What do you say to that?
No, keep your records. I mean, I'm keeping all my records as I always have, because, like I said, the ink is still drying. As of right now, these laws are supposed to go back to what they are for 2017 in 2025, but they could change again, right? So I would still keep your expenses as you always have. That's my answer. Because I don't know.
And I would second that. And I'm going to say this, guys. The tax law should not affect how you run your business.
Yeah.
You need to keep those two things separate, in my opinion, right? Mm-hmm. And what this tax law, the whole thing about it was, you should be able to do your taxes on a postcard. Right?
You can't
right.
yet,
but that's why they did this, right?
Yeah.
But all of us in this room, as an artist, as an actor, you are a business owner. And regardless of what the current IRS laws are, you need to act like a business if you want your business to be successful, okay? So if acting is my hobby, right? It's my hobby, and I take classes from time to time because I think it's fun, right? Well, then I don't expect to get deductions. I just take my classes, but I also don't expect to make any money doing it. It's my hobby, right? We get that? But if you don't have a hobby, if you have a business, then keeping records is what good businesses do. Whether today the IRS is not giving us that benefit and tomorrow they are, good businesses keep business records. So don't allow this to make you lazy, for lack of a better word, because that is going to affect your success in lots of ways, okay? So this sucks. I probably shouldn't say that on camera, but we do not have to be victims, okay? Great. So when we have deductions, what's allowed? If it's against 1099 income, right? Because we can't do crazy stuff still.
Like gym memberships.
Mm-hmm.
Right?
And haircuts.
Or audition clothes that you still wear on
Manicures.
Normal stuff, on normal days. I know. basically, if you guys ever, you can look up the Schedule C if you just type in Schedule C, online. Any deductions, and you can read the IRS definition, anything that, is ordinary and necessary to run your business, right? And that includes, anything, your cell phone, right? We all use our cell phone, a portion of it. Because you still probably call mom, or you call friends, or you check Facebook or something, so that's personal use, right? So anything that you use, and be honest, that you use for your business. You can take a home office expense on your 1099, but make sure it is exclusively used for business. In the case of a field audit, which hopefully nobody has to deal with, but if there's a dog dish in the office, they will disallow it because that dog dish is seen as personal use, right? So they mean exclusively used for business, okay? I'm sorry? Internet, yes. Like anything that helps you do your business, you can deduct. The reason that you most likely can't deduct gym membership is because it's for upkeep. Unless a director says you need to, and you need to have proof that the director asked this, but you need to look this way for this part, right? Haircuts, if it's just upkeep, no, but if it is for a certain part, then yes. And mileage, how much do we drive, right? We're in LA. And Lyft and Uber. Makeup is iffy. If you use it for every day, no. But if you use, specific things for just, your profession, then yes. Just, be smart about it. I know we all fudge a bit. We shouldn't. But you know what you're fudging, and don't fudge it. Right? If you are using it for both, you cannot take it off, really, right? You can't. If the IRS sees that, they won't allow it, right? So just be smart about it. Yeah.
And this
is only 1099, guys, because, right? We're not taking questions, y'all. Put those hands down.
Yeah, guys, sorry, guys, I know. I understand, but we
don't have time.
Okay, sorry. So, guys, think about what records you should be keeping, like we just talked about, right? Regardless of whether you're getting the deduction or not, and get clear on what you're allowed to take as a business deduction right now, only against 1099 income, okay? But also get clear on what the myths are out there, right? So those of you who have been going to the movies, and every time you go to the movies, you take that as a deduction and call it research. Those of you who have been writing off all of Netflix, who have been writing off all of Hulu and calling it research, those are the kinds of things that in an IRS audit, you're going to have a problem, right?
Yes.
And so that was a really clear question that some people asked. How do I keep records that ensure that if I am audited, I'm prepared?
It's a bit of a gray area because the audit process, I've only 2 or 3 times, thank God. What happens, I don't know if anybody has been audited, I hope that's never happened, but it's very simple process, really. What happens is you get a letter and they want to see receipts. And so you need to present receipts, right? So whether that's the actual receipts, email receipts, bank records are still a gray area. Some agents accept them, some don't. Because some person is looking at these, right? Someone is still looking at them. Whenever you get all of your receipts together and send it in, the first time it'll probably be rejected. Just telling you that. So you'll probably have to send it in several times. Always make copies, always make copies, always make copies, send them the copy, okay? So when you finally, and always try to request an in-person audit so then you can show the receipts, but I keep an old-fashioned date book, and I write down every day what happened to the audition that I went to. So there I know I have mileage, right? I can tell where I went. If I donated charity, I write down the day that I donated it. Just keep records of everything. Keep your date book. Keep your receipts. Keep your file folder with your receipts in for everything. Bookkeeping, I'm old-fashioned, so I keep mine in file folders, but there are so many bookkeeping software that you can buy. QuickBooks Online, I know isn't the top of the line, but it is free and you can use it. There are so many things out there that you can use to your advantage that you should take advantage of. But it's going to be tedious. It's not fun unless you like that sort of thing. But it's very simple. You have to keep record of your expenses. You guys know how to do that, right? Keep a logbook. Keep a mileage log. You just have to do it is the problem.
Now, here's a game that I usually play in some of my classes that I want to do really quick to sort of prove a point. It's the very end of the day, okay? So I want you to raise your hand if you have spent money paying a bill, going to get gas, going to get a coffee, anything like that, at least one time today. Put your hands up. Okay. Now leave them up if you've had 2 transactions today. 2 coffees, 2 or gas, or you went and got groceries. Okay. Leave your hand up if you've got 3. Okay. You see we've lost a bunch. 4. Okay, so we literally have like 5 people left. Throw out how many numbers? How many today? 4. Okay. How many? Like 6 or 7 because you paid a bunch of bills? Okay, so she paid bills today. All right. So if I asked you, right, at the end of the day to either record in software or on a spreadsheet or even on old-fashioned pen and paper, what you bought that day, there wasn't a single person in this room who had more than 6. How long are we talking about it taking you? Probably 2 minutes, but I'll give you 5, okay? And so this is tedious and horrible and painful. We have to stop telling that story, guys. Because it's only tedious and horrible and painful because we're not doing it until April 1st for April 15th, right? And so again, as business owners, if you created a discipline of recording even every few days, we're talking about 10 to 15 minutes of relatively straightforward, simple work. Okay? So I just want to make that point because we tell ourselves these stories that it's brutal and horrible, and it doesn't have to be, right? And then how easy would it be for you if you had that in a spreadsheet, if you had that in software? Your tax preparation would be like that, okay? So
now we only have 10 minutes left,
yes,
so I don't know if you want to hit other questions or what.
So what I want to look at is you talked about, this is a big question that we have.
Okay.
All right, yeah, should we still save receipts? Yes, we got that.
Yeah.
So how do I keep track of everything? We
Got
talked about
that. We got
Bookkeeping and
that.
apps. Okay. Issuing a 1099.
Yeah.
Do we have to issue a 1099? So a wonderful question that I got is, now, do we need to be issuing 1099s for agent or manager commissions? That was Susan who asked that. Oh.
You guys are awake. Okay. Oh.
Is everybody wondering that? Wow. It hadn't even occurred to me.
So I am not. I haven't heard anything change about it. I'm gonna say, from my knowledge, no. Okay. Why was there a laugh? Oh, I mean, unless you have been, you can issue 1099s if you want. I mean, it's not like it's a bad thing. But so if you read a 1099, you do not have to issue a 1099 to a corporation. You don't. And that's why a lot of corporations don't get 1099s. That's why it's so important for corporations to keep bookkeeping, right? And that's why it's important that you have a bookkeeper or something if you do have a corporation. So that's why, like, I'm with Abrams, and so I don't issue Abrams a 1099 for my commissions because they're a corporation and they have my commissions already in their system, hopefully, right? So no, you don't unless they ask for one. Did they fill out a W-9 for you? Because you need their SOCH if you're going to issue them a 1099.
Right.
So you need to have their social security number to issue their 1099. So if you don't have their information, how are you going to issue that 1099?
Okay.
That's fine.
Well, okay, sorry, forgive me, but here's the thing. Just substitute actor for talent manager or substitute actor for writer, because it is exactly the same. So really, totally forgive me, because it really is. So what we've been remiss in that, we're actors and it's a SAG thing, and we absolutely should not have, an Actors Fund, and so we absolutely should not have done that. I should have kept saying everybody who's all kinds of people, but all of this information is exactly the same. Whatever expenses you have as a talent manager that you used to be able to write off on your W-2 income, you can't anymore. Now, if you are 1099'd, right, then you still can, okay? So regardless of what you do, right, but
Yours is probably through a corp or it's a cash. You're a company, that's what I'm saying. Yeah.
Right, so as a company, this hasn't changed for you. Companies are fine, right? Okay. Yeah.
Did I say that?
Yeah. So, and thank you, because this actually is really important, right? This is where, you guys, you have got to have, you have to sit down with your person. Because, yes, my CPA told us, you guys can't be taken off the entertainment dining anymore. You can't be, right? And so there are these little, right? Really, honestly, because this is a 2-hour workshop, we're going for the general, right? But yes, if you're someone who has been writing off lots of client dinners, and I can totally see how that has now changed, right? And so those of us in the room who were doing that, even though we weren't talent managers or agents, right? That is one of those ones that's gone. But even on 1099, they've taken away this. Yeah.
No, they haven't.
Okay, it's killing you. Just say it.
You need a shot. Yes, that is still correct. That's what I'm saying. This is all, y'all, everybody take a breath. Oh my gosh, I'm a Reiki master, y'all. We need some healing energy in here. We get talking about taxes, everybody's butt just goes, whoop! Woohoo! Yeah, so because we don't know, like I said, we have not done an 18 return yet. I still have to do my continuing education credits, and that doesn't come out till December. So what I think will happen, don't quote me on it, but it's going to be it's going to be tedious for us, but what we're going to do, I believe, is do an IRS return and then do also a California return separate. And so that's why we're saying keep everything, y'all, because we're trying to figure everything out too. So it's not going to be the huge deduction that you get now, but there might be a few hundred on the California side that you still might be able to get with that Schedule A on the California side. Yes, okay?
California side.
So keep that in your pocket. Keep all your receipts like we keep saying. We're going to be okay. We're almost done. Woo!
We're totally almost
Who
done.
needs a shot?
Okay. So if you haven't issued 1099s, Probably don't have to, right? Because you haven't been doing it.
Yeah, I mean, 1099s, you need to issue them to people who you are paying over $600, and they are to independent contractors. So if you do have if you have a Schedule C and you are paying people, you need to give them a W-9, and then they give you the W-9 back, and then you need to issue that 1099 before February 28th, 29th. Oh, and I addressed that, and I said, no, you don't have to. There's nothing been changed about commissions, because if your agent or manager is already a corporation, they don't need 1099s anyway. They don't get 1099s.
Yeah. No, but okay, so sorry, because we're now, I think...
This is not specific questions.
No, it's okay. I think what we're doing is we're combining things, okay? So here's the thing. Issuing a 1099 doesn't now mean you get to write it off, okay? So
Is that what they're asking?
Yes, that is what they're asking. Okay.
No.
So here's the thing, you guys.
You don't get to do
okay?
that.
The most
No, that doesn't mean you get to take it off.
The most painful loss for many people in this room is the loss of agent and manager commissions, okay? And there isn't a legal solution for that at this point.
There's not a legal solution.
Okay.
There
and
isn't.
So issuing...
If your guy or person is doing it, it's not kosher.
I think that some of the things that people are asking, so what she threw out is she said, what if the studios start paying them directly, so at least you never see the money? Remember when we said, guys, that this is where we have to start getting vocal?
Yeah, this isn't our
right?
issue. This is where
we have to start getting vocal, because yes, that's a possible thing, which is that because right now I get paid $60,000 that I only see 45,000 of, but yet I pay taxes on the 60. So Emily,
Yes.
tell everybody.
We did.
Okay.
Okay.
What is, and this is not about Emily, this is, what's the ballpark range to get my taxes done as an individual? What's the ballpark I can expect to pay?
Okay. And you can look this up on the internet. It's about $295 to $315
Okay.
for a single.
So people ask me that all the time, if I'm jumping from TurboTax to like having someone do it.
Yeah.
Just know as you're shopping that that's about it.
And that's
right?
that's the average.
That's
you
the
guys.
average.
That's about the average.
So yeah, as long as you're filing jointly.
Married filing joint's about $375. Okay.
Right. Okay.
Okay.
A corporation is going to be more.
Yeah.
Right. You're probably looking at
600,
750.
6 to 7.
Okay. Maybe up to 1,000.
Woo!
So that's going to be more. Okay.
Yep.
Remember, guys, when you go in to have your taxes done, you are not paying for that person's organization. You're paying for their tax knowledge. And so that $300 doesn't buy you come in with a box of receipts.
Don't do that.
Okay? They will charge you a whole lot more. You have to get
That's
yourself
awful.
organized,
Yes.
okay?
Yes.
I am going to close by sharing a question that someone asked.
Okay.
Right?
Okay.
She said, my goal is to manage my finances without hiring a business manager. Will I always need an accountant, or is it something, and a bookkeeper, or is it something that I can do on my own? Okay?
Okay. Yeah.
Now, I believe that we tie this back to the beginning where I said, no one cares about your money more than you do. So in my opinion, right, I think we need to have people on our team. I want to have a tax expert on my team because I don't want to be a tax expert, right? But you have to know your numbers. You have to learn how to do your bookkeeping. You have to know how to keep your records, because what we call, I think, parking and praying, which is I hand my money over to someone and I hope and pray that they do something better with it than I do, is not a good method.
Yeah, I would agree. I mean, I think if you like numbers, and you want to learn how to keep your books, I think you can do it. You can if you want to take the time to do it. I do think it is valuable to pay a tax preparer, not just because
Absolutely.
I'm a tax preparer and stuff, but I think it is valuable to take, once you have everything organized, I think it's valuable to take your stuff to someone, just because I've had so many clients who have done their own taxes, didn't know where to put stuff, QPA and all that sort of stuff, and I've had to redo their return so many times that I've seen there. It's good if you take it to a professional who knows where to put everything, especially with the new tax laws, right?
Right.
So
Okay.
yeah.
So, guys, can we please thank Emily for coming and giving?
Woo! We did it!
We did it.
You guys are awesome! We got this. Yes, thank you. Thanks, Miata. What? This girl knows her stuff. Yes. Oh my gosh.
And I know, that obviously we couldn't possibly have answered every question that was in this room, but I hope that you guys take this information and move forward a little more powerfully than when you showed up. All right? Have
Yeah.
a great weekend, guys.
We got this.